Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I would like to go with you through yesterday and the day before yesterday's price action on AMC. We had a lot of volatility, a lot of things happen and can give us information for the next moves. So let's get into it. All right, so I'm gonna start on the 4 hour time frame very quickly. We take a step back as usual and we analyze what happened since Jan 21. So we had one strong move up, correction, second strong move up, correction. We are waiting for the next move up. So we need to analyze this correction and try to find some levels that are going to help us to know if it's finished or not. We're also going to use some other indicators like MACD that I lost here. So we're also going to use some other indicators like the momentum that's going to help us to know if a reversal is likely to happen or not. So first, I did my last video here just after we had the earnings announcements that were better than expectations. When I did my video, the aftermarket was around 35, and I was telling you that we are set up to go test the next resistance level that is here, represented by this upper band, so downward sloping trend line connecting this high and this high, all right, on the 4 hour time frame. And this is what happened. We opened, I think, at +7 or +9%, and then we tested this level. We slightly moved above, but we didn't close above, which we need, which would be for me the major signal that this correction is over. And then we had this nasty red candles and closed the day down. And then yesterday was also a red day, but let's see what we had here. So basically resistance here, rejected, all right? So basically the bears were here very strong. You know, there was a very hard selling pressure here, very strong selling pressure. And then we corrected. I had here a support at 31 that didn't hold. And you can see that here we had another kind of, what we can call a bear trap, all right? So that's why I prefer now to make analysis on the medium term for AMC, because the daily moves are very, very hard to predict. It's full of tricks. So I'm gonna stay on this kind of, longer time frame analysis and try to give you some scenarios on the medium term, which is for me giving good results for now. So here we have this bear trap, definitely. Why is it a bear trap? Because here, as you can see, guys, we have this trend line, all right? So first, tested, we got rejected here. Then we gathered some strengths and we managed to blow up this trend line. So here we have a short-term breakout that was then retested here, and that then broke. And right away, we came back to it. All right, so this is interesting to analyze. And basically, we have here two different, so if I go on a daily, we now have two different candle formations that can indicate us what's going to happen. So up on the daily, you can see the trend line moved. So I just need to reconnect it to the high, okay? Because it's with or without the aftermarket hours, but it's pretty much coming back to the same. We have something like this. And here, so this is a bearish engulfing, all right? But bearish engulfing, so when the candle here is eating totally the previous candle. So you open above, you close below. This is a bearish signal, but is actually very effective when we are at the top of a bull trend. Here, it arrives kind of randomly, so it's not that powerful, but it's still a very nasty candle. And the day after, what do we have, guys? We have this doji candle. So what does it mean? It means that here a lot of bulls have been trapped, and here a lot of bears have been trapped. So it's kind of even to me. This is offsetting each other effects, and this is like the doji candle is a reversal pattern and it's arriving at the bottom of the trend. So I would say that this is slightly stronger than the signal we had 2 days ago. Now, what is the situation? So we had some, let me zoom in a little bit. Let's go on the hourly time frame to see what happened here. So like I was saying on my Discord in the IMC recap, this is a beautiful battle between bulls and bears, guys. All right. So the bear camp is here in orange, and the bull camp, so we have here some brave soldiers that were at the 29 levels and that helped the price action to go higher, all right? So here, but the real bull camp is to me lower, all right? And we're gonna have a battle that is gonna happen soon. Why? Because this trend line is going lower. and the bear camp is gonna slide on it. So sooner or later, we're gonna have this battle. So maybe we have here some bulls as well, all right? And they are strong. Yesterday, they won the end of day battle. So maybe this battle is gonna be enough, and the price action will just pop up here and start to develop into the fifth wave, or we're gonna slide lower until the end of this trend line is the 2nd of September, and sooner or later, in the kind of bearish scenario where we go lower, sooner or later there's gonna be a battle. And what's my take here? The bulls are probably gonna win this battle, and it's gonna probably be the victory that is going to lead us to the fifth wave. So let's see. This is for me too early to say. For now, the bear camp is here. Maybe we're going to test it today again. Let's see. To be honest, I have no clue about that. The only information I have, and I'm giving it to you for a couple of days, is this bullish divergence that is positive for the price action. It's going to impact the price action roughly during the period between the lows, so until the 2nd of September. So we have the bullish divergence with us, which is good. And that's it. Then we have those candles that are pretty much offsetting each other's, all right? So the bearish engulfing candle and the doji candle. And this is the situation for me. So I cannot really give more details here. We need to see more price action to find out what is going to happen. So for now, my scenario that is to me holding is this WXY with maybe the Y wave that is complete. This would make sense in terms of Fib ratios. We would be roughly to the 1-to-1 relationship between Y wave and W wave, which makes sense according to Elliott wave theory. So let's find out, all right? I don't have more information. We need to analyze what is going to happen. But this is also what I'm sharing with you guys on my Discord. So it's too early, I would say, to know what's going to happen next week or in 2 weeks. But what we already know is that 24 is a strong support level. So this is the kind of strategy that I'm sharing with you guys on my Discord. This is to me the best option trade that can be done today, according to and using all the information that we have from technical analysis. So the information we're having is that 24 is a support level. Okay. So let me first do like this. Okay. So we start from scratch. 24 is a support level. So we are not scared about the price trading below that level within roughly 1 month, because we know that even if we go there, maybe there's going to be a battle, but probably the bulls are going to flex their muscles and we're going to close above this level in September. So I would be a seller of this, all right? So this is, so you start to losing money. You can lose up to 2,400 US dollars, 100 times this roughly. If you finish below 24, if you go to zero, all right, this is the maximum loss. But you make this so that you make some premium. With this premium, you can buy a 40 strike call. Why 40? Because this is roughly the resistance level. It's maybe now 38, so you can go lower. So you buy this one. So now it costs only 200 US dollars. And once again, as it will take some time to go to the 130 level, you can, so let's say 130, we can be a seller of this because, this is for me my next strong resistance level. So by selling this, we reduce the total premium to 75 US dollar, and we only cap here the performance, all right? Without it, it's like this. And if you sell it, you just cap your performance. So you basically can fully benefit from the upside movement between 40 and 130 for a very limited cost, only 75 US dollars. So this is the type of strategy that I would be showing you guys on my Discord. By the way, for those who want to join, just click on the link in the description of this video and you can join one of our memberships. And you don't need to go for the platinum one, all right? That I know is expensive, 150 US dollar a month is expensive, but trust me, it's worth it. We are gonna show you guys there live trading. So I don't know if there are many YouTubers doing it, but we are not only YouTubers, we are traders. And I'm taking once again a big risk here because I want to show you that everything that I'm talking about, all the techniques that I'm using to make my analysis that give me sometimes very good results, that sometimes are not helping me to predict price action, are actually efficient. And this is my project. This is the reason why I created this place. and I'm very excited to start to do live trading with you guys. But once again, if you take the gold membership, which is still 25% off until the 15th of August, you can have access to any stock analysis. You can request to me or Gabriel a lot of stock analysis. Gabriel is the trader that joined TRENDLINES 2 weeks ago. He is amazing. He's using different techniques from mine, so it's going to be very interesting to see what is working better and what we can do together. And if you just take the gold membership, you can already request every analysis you want us to make, and you can access to all our trade ideas that we will follow and we will keep monitoring for you guys. So once again, here, let me go back to this trade. What I wanted to show you, so let's go back to September. I wanted to show you that you can do the same strategy. So if you're on September, it costs you $75 and you need to have AMC being between 40 and 130 to be in the money on the 17th of September. But if you guys want to have more time and go for the Gen 22 maturity, this makes sense to me. And you can see that here. So there is less advantage to be taken off from the volatility because those volatility are closer. But once again, the VIGA is higher on the longer term maturity, so it has more impact on the price. And you can see that here we actually have a negative premium, which means we receive money to make this strategy. So if you finish between 24 and 40 in Gen 22, the 21st, you're gonna receive $140 US. All right. So this is cheaper. And it's giving you, of course, the same P&L profile. The only difference is that if the move happens in September, this is the payoff at maturity. So you would need to unwind your strategy and you will not unwind it for the full profits, all right? So basically, it's giving you more time, but it's going to make less profits if the moves happen early. But once again, it's giving you more time. So it all depends on what type of view you have on AMC. If you hesitate, you can still do one of each, all right? That makes sense too. You can also go to October maturity. Everything here works depending on what you want to do and the P&L and the risk profile that you want to have. So that's it for me. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.